Hello guys, welcome to my YouTube channel. This is Oba FX. Um, like to quickly do a top-down analysis as part of our top-down analysis series, but this time I'll be doing it on a derivative synthetic index jump 75. Now, if maybe you're the type that you trade only forex, and this might not be of much interest to you, but we have a whole lot of people who trade derivative synthetic index, and I also got some messages via my WhatsApp line on in my bio that they needed me to look into this. So without wasting much time, I'd like to delve quickly into it. So Trump 75 index has been moving in a very, very interesting manner. So if I'm to backdate a bit, this is a daily time frame. If I go to the weekly time frame, you can see that we don't have much here. Can see that the markets has been choppy for a while, haven't gone down for quite some time, and then it just became choppy sort of here. But however, like I always say, each time you take a closer look, there would always be something to maybe probably trade off. There would always be maybe enough information to get us something. So let's look at it, go back to the daily time frame. Now, from this daily time frame, like I said, the market had been choppy for a while. So when we say choppy, it means ranging in a non-uniform manner. So if I were to take this as a range, so I would rather call this a choppy market because the range is not even going from top to bottom. In some cases, you have it here. So that's that. But that's not the point because this is not the most recent information the market seemed to be giving us. So when the market went out of this choppiness, the market went out of this choppiness, it finally broke out from this level and went up. So that gave us a whole new word concerning this synthetic index. So starting from this point, let's look closer to see what we might be getting. So the market shot up and almost immediately came down. So bulls came into the market to push it upwards, and then BS came pushing it down, making a series of lower lows and then lower highs. However, the market on getting to this level, we saw something like a double bottom that commenced and that led to the commencement of an uptrend. So for analysis, it will be pertinent or important to focus on this part of the chart, which is the uptrend. So to start off, there are a few things that I'll be using for this analysis. I'll be using a trend line, trend line, trend line. Let's change this to blue. Okay. Um, can get that. So I'll be using a trend line. I'll be using the Fibonacci retracement tool. Then I'll be using a support or resistance zone. So three things: a trend line, Fibonacci retracement tool, support or resistance. So first, let's inculcate this trend line. If we can get one, okay. Now, for those of us who are not very, very conversant with how to draw trend line or the right way to draw it, I have a video to that effect. And that same video also talked about support and resistance. You can always go through that to help you. So now we have our trend line, which clearly shows that the market made a series of highs, then made a higher low, shot back up to make a high, and currently retraced back to give us what? A third touch of the trend line, which is very important. And the next tool I'll be adding will be the Fibonacci retracement tool. So if I place this here, now like I had said even in my previous video, the Fib tool is a tool that helps us to see where price retraces back to before maybe continuing in its initial direction. So the Fib tool is much more important only in trending markets. So in other words, you can't use this to trade a ranging market. So our market is trending upwards, so we can inculcate a Fib tool. Also, another thing to note is that in the Fibonacci retracement tool, there's a very important level that for 80 to 90% of the time, when price is rejected off that level, then it goes back to its initial direction, and that's the level between the 50% and 61.8%. Now, a way in which I try to buttress the importance of this zone, that each time I mark it, I try to see if it coincides with what is support or resistance zone. So what I do is I draw this to the left, and voila, we can see that it does. Now, why will I say it does? Each candlestick on this chart represents a day, and that's 24 hours. So we can see that price has just gotten back into this zone between the 50 and 61.8, and price is currently being rejected. Initially it was rejected when this red candle got in. Now we have buyers, because this green candle indicates the presence of buyers in this place. But if we go and look to the left part of our chart, we can see that when price initially got into this place, when sellers tried pushing this chart down, this candlestick shows a rejection in this zone. Then price, another candle in another day, got into this place, was pushed back down. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So for 12 different days, this zone acted as either a support or a resistance, but it acted mostly as a resistance, and now it is currently acting as what? A support. So we have three things in this market. First of all, we have the market moving in an upward direction, trending in an upward direction, and our trend line helped us to see that. And not just that, we can also see that this market is making a third touch of this trend line, and that the point at which it's making a third touch coincides with what I call the Fibonacci retracement golden zone, which also aligns with what a strong support zone, which had acted in time past as what? Resistance. Now, all these things together are what I call my trading confluence. And what this helps me to do is that it gives me confidence that whatever decision I'll be making here is backed up by enough reason for me to place my trades. However, this is the daily time frame. So it's now what this is showing that price, we don't just have a strong confluence, but price is currently at the key point of interest of our confluence. But we can't take our trade from the daily time frame. So what do we do next? We scale down to the H4 time frame. Now on the H4 time frame, we can clearly see that buyers are doing a lot to push price upward. Now, how do I know this? All I need to do will be to zoom in. And in zooming in, I observe the candlesticks that are present here. Now we could see that price was moving massively downwards, but immediately got into this key zone. There was a reduction in downward momentum, and then we started having indecisive candle. First there was a doji, and then we had like a hammer, meaning Price tried to go down, but buyers rejected price from continually going down. And then we had like a sort of 1, 2, 3, 4, 5 candles ranging, and voila, we had this massive um, bullish candle. Now, even though sellers try to push this back down, buyers are currently also fighting to push it up. Now, is this information enough for me to start clicking buys? Probably not. So if I go to the line graph to see the exact pattern that's being formed by these candles. Okay, let's see if we can do that again. If we go to the line graph, okay, I'm having a bit of a network issue. So the best thing to do next will be to scale down to the lower time frame to see if we can get the right candlestick combination or chart pattern to allow us take trade. So now this is the H1 time frame. Now, from what I can observe here, the H1 time frame, price had initially formed a double bottom, and like I had explained before or on other videos, a double bottom is an indication of a strong bullish reversal. Now this are the bottom and this was the neckline, and just like I've always explained, once the neckline is broken and retested, so price formed a double bottom, took out the neckline, came back to retest it, and then used this neckline zone as liquidity. Because of the textbook explanation of how to trade double bottom, a lot of people immediately price got here. Some people would even place buy limit here. A lot of people would have placed their orders here and then be hoping price goes up. But most times what the market does is it comes down to grab liquidity from this neckline, goes down inside and then tries to make its way up. So from what I am saying, this is a chart pattern telling me that a buy is imminent here. But another thing that I can also see is a candlestick pattern, which I would call what the morning star. Now this is what I will refer to as a morning star, where we have a bearish candle and then another smaller candle, then a bullish candle. So this is enough information for me to take my buy trades. This is enough for me to be confident that this market would be going in the upwards direction. So if you have an opportunity to come across this video and price is still around this place, then I would advise that you take your buys where you have your stop loss here. Your stop loss would be here, and then your take profits would be at this point. Now we can see that this is going to give you what? Massive profits. So this is a very, very viable trade. I'm going to be publishing this, and I'm going to also put this in my Signal group. This is a very, very viable trade. So I'm going to be telling people to buy Jump 75 index. So if you come across this video and price is still in this area, it is very, very viable. There's a strong probability that this trade will be going up about now. So like I always say, if you come across this video and and you find out it's of any value to you, and I'd like to plead that you hit on the subscribe button. Please share with your friends to give this video more traction. Also, we are open for training and mentorship, as this is a trading academy. So you can always reach out to me via the WhatsApp number on my bios. Thank you for your time. See you some other time, and cheers.